Hi, it's Mark Boardman here. I'm just going to talk you through the trades for Thursday and Friday. That they are the 6th and 7th of September. Um, Now, there were two losing days, so both days were losing, and it ended up balancing out the week. So the week ended with a loss of -8 pips. Um, what I'd like you to know, and it's really important that you understand this, there'll always be at least one losing week out of every four. It's just the nature of this strategy. We're not interested in getting more winners than losers. We're only interested in the average winners being greater than the average losers. Can you see here? This is over 3 weeks. We've got 43 trades. We're looking at about half of them being winners and the other half being losers. That's not important. What's important is that your average pip gain on your winners is 37 and your average pip loss on your losers is 17. So roughly a ratio of 2 to 1. Consequently, over 3 weeks we've made a 466 pips. Um, Personally, and you'll have heard me say this in the trading room, I think that traders who obsess over getting more winners than losers ultimately um, don't make money in the long term. The people who make money in the long term are the people who obsess that their winners on average are greater than their losers. I even know traders that have more losers than winners, but because their winner pip gain is always greater on average than their losing pip loss, they still consistently make money month in, month out. Okay, so let me just very quickly go through all these trades from Thursday and Friday, and here we go. We had a euro Canadian dollar here. I've just put the words here on the chart. This was going in the right direction, but I got out here just before this volatile move. Now, one of my rules is if there's big news coming up, is to get out of the trade um, just before the news, really, sort of half an hour or more before the news, and that gave me a small profit there. Okay, I could easily have entered again after the news here, but I didn't that day, so that was a small profit. Then that was the euro versus the Canadian dollar. All these trades, by the way, were signalled by the fat man signals here. As you can see, if you've not seen any of these videos before, these are the currency. This is a currency strength meter, tells you when a currency is going to turn around and go the other way. So when you see these lines at the top and at the bottom, that's when you can be pretty sure the currency is going to turn the other way and go in another direction, so you then catch the trend. Okay, here was a small loser here, if you can see, and you'll notice this, apart from one or two, you'll notice when I go through the losing trades that most of them are quite short-lived. So for example, if you look at the number of red dots here, we were out of the market pretty quickly there with a small loss. In contrast, when you get the bigger trends, they tend to be more dots in a line, and this is why you just need to obsess about your winners being bigger than your losers. That's the only important thing. Here was another small loss here, if you can see, in and out pretty quickly here, touch of the crash barrier, if you see there. So that was that one. This was a 1 minute trade. These are all Thursday. Here, more or less break even, that one. Stopped out here at the crash barrier, if you can see. Okay. So again, what you'll tend to find, there'll be an occasional trade, and I'll talk you through one in a moment, that really does move against you. You can't avoid that in trading. If you want to make money and earn a living from trading, you have to accept the rough and the smooth. And the rough is occasionally you'll get a volatile move against you. I'll show you one of those shortly. Here was another just above break even trade here, if you can see. Okay, that was a pound versus the Australian dollar. Then we had the Swiss franc here versus the Japanese yen on the 15-minute chart. Again, in here, out relatively quickly here. Alright. These two following trades were both the Australian and the New Zealand dollar against the US dollar. These were very much counter trend trades. As you can see, this pair was trending up, but who was to know this could easily have been a reversal and come back down. So I will still take these trades, and here you can see there was a tiny loss there, as there was here. Okay, can you see? So that was that. Now the volatile move was this one. Let me just show you this one. This was the pound against the US dollar here. Can you see this? We had a big sharp move, and now there was no warning of that from a news perspective. It just can happen in Forex, and that protects us there, this crash barrier. And rather, so we get out as soon as it touches that crash barrier. So if it had moved further up here, we'd have been out anyway. Okay, but that's this kind of move that once in a while you're going to get, you know, one a week on average. I get of those. However, I get at least a couple of big trenders a week. So for example, I mean, there was the big volatile move, which is 50 pips. This US dollar versus Swiss franc looks like a big loser at minus 46, but actually it was a 4-hour chart. So actually losing 46 pips on a 4-hour chart is really not a lot. You know, it's the equivalent of losing around about 10 pips on a 1-hour chart, or 2 or 3 pips on a 15-minute chart. So you've always got to bear in mind what your average loss and winners are relative to the time that you chart that you're trading in. Now my total average winners is 37, my total average losers is 17. But one of the things that I'll be doing shortly is breaking these down into the different time frames and showing what the average winner is and the average loser is in all the time frames. So for example, all the trades in the 60-minute chart, what's the average winner, what's the average loser. All the trades in the 15-minute charts, what was the average winners and what were the average losers. And what you'll find is that the average winners are always greater than the average losers regardless of the time frame. Okay, so far that's 3 weeks of this now recorded. 160 pips profit in the first week, and then as you can see here, first week 54 pips here, 36 there. Not very many bigger losers there. Then we had a couple of big trends in the second week, and at the end of the month these are the ones that really help you out. 176 here, 72 here, and 89 here, and these are the big trends you get using this system. That's why I call it the trend catcher. And then a 95 here. Notice that in 3 weeks of trading now, the biggest loser is that 50 there. We've had a 50 and a 46 yet, and to counterbalance that we've had a 95 winner, another 89 here, a 72 here, and 176 here. Okay, so this is my point. Only ever obsess about how big your winners are versus how big your losers are, and this takes the stress away from trading. Because if you place a trade knowing that roughly on average half of your trades are going to be successful and half are not, but that the half that you do win are invariably greater than the ones that you lose, that gives you a lot of confidence and completely removes the stress from your trading. In contrast, when I used other indicators in the past, even when I got 50% right, for instance when I used moving averages, the winners and the losers were about the same, so I wasn't really gaining any ground. And also when I used Bollinger Bands, when I used MACD and so on, the other indicators that I used wouldn't give me this ratio of big wins to relatively small losses, and that's the key to this system. Okay, I hope you enjoyed that. I've got one more trading room, only one trading room this week. That's Tuesday the 11th at 2 p.m. And then I'll be back again next week. So I'll keep you informed if you keep coming back to this website, and I'll let you know and give you an update with these videos. So thanks very much for listening, and see you soon.